Welcome to this deep dive for the Modern Investor series, brought to you by the Royal Krakow Mint's Precious Metals Show. Today we're looking into a stack of financial reports to figure out, what the ultimate smart money actually knows about physical gold that everyday investors might be missing.
Yeah, the data in these sources is honestly pretty eye-opening when you really dig into it.
It really is. Think of it like a high-stakes poker game. You always want to watch what the pros are doing, right? And right now, the world's central banks are quietly cashing in their paper chips for a very tangible asset. So just how massive is this shift we're seeing?
Well, it's staggering. Central banks bought over 860 tons of physical gold in 2025 alone. And this isn't just some sudden, reactionary panic to a headline. This actually marks the 16th consecutive year of net buying by these institutions.
Really? 16 straight years?
Yeah, exactly. 16 years of net buying.
That completely defies normal market cycles. What is driving a multi-decade accumulation like that?
It really comes down to understanding the core difference between gold and traditional fiat assets. I mean, at its foundation, physical gold is no one else's liability.
Right, because with like a U.S. Treasury bond or foreign reserves, you're relying entirely on another government's promise to actually pay you back.
Precisely. You are completely relying on a counterparty, and if geopolitics go sour, well, they can just freeze that asset with a keystroke.
Oh, wow, yeah, just wiped out instantly.
Exactly. But gold has no counterparty. If you hold the physical bar in your own vault, no foreign government can freeze it or default on it. It gives you a level of sovereign independence you can't get from paper currencies.
Okay, let's unpack this trade-off a bit for everyone listening, because I'm looking at this from an investor's perspective.
Yeah.
And gold doesn't pay yield, right? Bonds pay interest.
Right, they do.
So are these massive institutions actually willing to sacrifice steady profit just to let a metal sit in the dark vault?
They absolutely are. You have to remember that central banks aren't, optimizing for a quick quarterly profit.
They're playing the long game.
Exactly. They are preparing for long-term uncertainty. When you manage a nation's wealth, you actively choose ultimate security over short-term returns.
Because they view things like inflation and currency volatility as permanent realities now.
Yeah, not just passing phases. And that strict focus on absolute security, it brings us directly to the logistics of where this gold is actually kept.
Which is fascinating, because if they're sacrificing yield for security, then suddenly the physical location of that gold becomes the most critical factor.
Exactly. And that's why we're seeing countries like France going through the massive headache of modernizing and moving their physical vaults.
Right, rather than just leaving it in London or New York where it's always been traded.
Yeah, because keeping it in Western financial centers introduces that exact counterparty risk we were just talking about. If the whole point is independence, you need it on your own soil.
Oh, I see. It's like a massive tech company deciding to stop using third-party cloud servers and building their own internal server farms.
That is a perfect analogy. They aren't just storing wealth, they're ensuring no foreign entity can ever unplug them.
And the data shows this trend isn't slowing down. Even with a slight dip in early 2026, places like Uzbekistan, China, and Malaysia are still heavily accumulating.
They are. And over in Asia, Singapore isn't just storing it, they are actually building an entirely new global central bank storage and trading hub.
Wow, a whole new independent infrastructure.
Yeah, to diversify the world's gold infrastructure away from the West. But, it's important to realize they aren't just hoarding this stuff in a dark room to never use it.
Okay, that is exactly what I was wondering.
Yeah.
We talk about accumulating and securing it, but what is the actual mechanism when the alarm goes off? Like, how does a country deploy a physical bar of gold to save its economy?
Well, it becomes a highly dynamic tool for crisis management. Take Turkey, for example.
Oh, right. Yeah, their domestic currency was struggling pretty badly recently.
It was. And when the lira was tanking, they didn't just sit on their gold, they actively sold off a portion of their reserves.
So they just liquidate the physical gold for U.S. dollars on the global market.
Exactly. The mechanism is straightforward. When their money collapses, they generate dollars instantly and then use those dollars to buy up their own currency to stabilize the price. It acts as emergency liquidity.
So for you tracking this at home, there is a huge difference between holding a global reserve currency like the U.S. dollar and managing an emerging market currency. For Turkey, gold isn't just a static rock. It's a globally recognized parachute.
That's spot on. They are using gold as the ultimate form of sovereign financial insurance. It gives them optionality when standard financial systems just completely seize up.
So what does all of this mean for you listening right now? I think the biggest takeaway is that central banks aren't chasing internet hype.
No, not at all. They are managing risk at the absolute highest level.
Exactly. And when the ultimate insiders move consistently in one direction for over a decade and a half, prioritizing physical, non-liable assets, you really need to pay attention.
It is definitely a massive signal for anyone watching the markets.
Which leaves us with the final, slightly provocative thought for you to explore on your own.
Yeah, something to chew on after the show.
If central banks increasingly view physical gold as a mandatory foundation for sovereign independence, what happens to the global financial system if this massive institutional demand permanently outpaces the world's physical gold supply? If all the smart money refuses to accept paper chips anymore, what happens to the game?